Welcome back, students. Now we are going to start with our fourth question. This question is from the reconciliation chapter. Let us read it. The trading and profit and loss account of a company for the year ended 31st March 2020 is as under. Trading and profit and loss has been given. This is under the financial accounts. In the cost accounts, factory expenses have been allocated to production at 20% of the prime cost, general admin expenses absorbed at 10% of factory cost, selling expenses charged at rupees 10 per unit sold. Prepare the costing P&L. Now we know when we prepare the costing P&L, we need cost of goods sold. So first we are going to do our working note 1, where we are going to calculation of cost of goods sold. We are just going to prepare our cost sheet up to cost of goods sold. Let us prepare the format. Particulars, computation, amount. Now, yes. So we are going to prepare our statement, our cost sheet. Let's start. We start with direct material. Now direct material, they have not given anything, and anyways it is a expense which is same in financial as well as your costing records. So that is 26,80,000. Next is direct wages. So direct wages, that is also given to us as 17,80,000. There is no direct expense, so what we get is prime cost. Prime cost, a total of this, that is 44,60,000. After prime cost, we add factory expenses. Factory expenses. Now this is our costing records. Under our costing records, we don't write the actual amount. What we write is the absorbed overheads. Now absorption rate has been given to us, that is 20% of the prime cost. So 20% of prime cost, that is 44,60,000. That is this into 20%. So what we get is our factory cost. Ma'am, gross क्यों नहीं लिखा? क्योंकि we don't have any opening or closing WIP. Since we don't have any closing or opening WIP, our gross factory cost and factory cost would be same. So that is equal to your prime cost plus factory expense, that is 53,52,000. Next, add. Now, after factory expenses, we add admin expenses. So they have given the general admin expenses. Now, since this is general and not related to production, we are not going to write. In our old format, we used to write all the admin expenses after factory cost. But as per the new format, we don't write the general admin expenses here. We write only those admin expenses which are related to production. So we are going to write this after cost of goods sold. So we don't have any other expense. The general expense we are going to write later, selling also later. So we can write this as factory cost slash cost of goods produced. Now, cost of goods produced. After cost of goods produced, we add opening stock of finished goods. Opening stock of finished goods, if you see, we don't have any opening stock, so we are going to write here 0 less closing stock of finished goods. Closing stock 53,52,000. If this is the cost of units produced, how many units did we produce? We don't know. So what we are going to do is we are going to calculate here first. Units produced is equal to our sales units plus our closing stock units minus our opening stock units. So that is equal to sale units 50,000 plus closing stock 2,000 minus opening stock 0. So units produced is 52,000 units. You can also make a star mark here, and the same star mark I can give here. So into 2,000 divided by 52,000 I can have a star mark of how did I get 52,000, from where did I get 52,000. So my answer here would be this, into 2,000 divided by 52,000, right, divided by 52, that is 2,05,846, 205,846. This is my closing stock. So what I get is cost of goods sold. That is what I wanted, right? So that would be this is our cost of goods sold. Now we have got our cost of goods sold. Let's quickly go to our costing P&L account. So let us prepare our costing P&L now. Costing profit and loss account. Particulars, amount, particulars, and our amount. Okay, let me quickly prepare the format. Okay, this is our format. Let us begin. So first, our costing to cost of goods sold, to cost of goods sold, that is equal to 51,46,154, and sales will remain sales, no change between financial and P&L, and costing, that is 62 lakhs. So what I get here is my gross profit. That will be the balancing figure. That is equal to 62 lakhs minus this. Right. So this is the gross profit. Let us have a total here. Again by gross profit, that is equal to 10,53,000. Now we have two expenses left, to general admin expenses, that is given to us as 10% of factory cost. So here we can write 10% of factory cost is 53,52,000. I have taken that figure from here. So that would be 53,52,000 into 0.1. This much. Now next to selling expenses. Selling expenses 10% of units sold. So that would be 10 into number of units sold is 50,000. That is equal to 5 lakhs. Done. So we are done with all the expenses. Preliminary expenses written off will not be recorded in the costing books, as well as dividend received will not be recorded. So we are done with this table. Now if you observe, there is a difference between what we have absorbed as our factory expenses or as our general admin expenses and what is recorded in our financial, that is our actuals. This is our under or over absorption. Now under or over absorption can be treated in two ways. Either you write it after the selling expenses or you show it in the reconciliation statement. Since we are anyways preparing the reconciliation statement, I am going to show it in the reconciliation statement. Even if you show it here, there is no problem about it. So what we get is, here we have approximately 10 lakh 35 and here 10 lakh 53. So obviously this side is heavier. So to net profit, that is balancing figure, would be gross profit minus general admin minus this, that is 18 lakh 46,000. So this is the total. Paste. Now this is our costing P&L, this is our profit. We also need to reconcile the profit. So next statement what we are going to prepare is the reconciliation statement. Particulars, amount and amount. Or we can have either addition and you can prepare it in any way. Let me just have one amount column and we'll prepare the statement. So start with any profit. Okay, they are saying reconcile the profit with the profit as shown in the financial accounts. So we are going to start with our costing profit. So profit as per cost records, that is given to us that we have found out as 18,646. Then now what is the difference? The first difference is the under or over absorption. Now we have absorbed 892 in our cost books and the actual expense is 9 lakh 50. Cost books and financial books. That means cost book profit cost is less. Cost is less means profit is more. And in our financial the profit is less. So what do we need to do? We need to reduce. So less under absorption of factory expenses, that is equal to since we are doing less, I need a negative figure. That would be equal to, what is the amount there? 8,92,000. 8,92,000 minus 9,50,000. That is equal to 8,92,000 minus 9,50,000. 58,000. Coming to the other absorption. Now general admin 5,35,200 in our costing books, whereas the actual expense is 482. Cost books, financial books. Cost books, cost is more, that means profit is less, and financial profit is more. We have to go from here to here, so we will add back. Add over absorption of admin expenses. That would be 5,35,200 minus 480,200. That would be 535,200 minus 480,200. 200. 55,000. So under or over absorption is done. Next is we have certain income which is not recorded in our cost books but recorded in the financial book. Cost book, financial book. Now financial book income is recorded, so financial profit is more, whereas cost profit is less. I have to go from here to here, so I will add back. Add dividend received not recorded in cost books. So that would be 80,000. Similarly, if income is added, the expenses would be deducted. Preliminary expenses written off. Expenses written off not recorded in cost books. That is equal to minus 70,000. Now income and expenses also everything done. See, generally there are only 4 differences: under or over absorption, income not recorded, expenses not recorded, and the fourth one is the valuation of my closing stock. So if you see here, the closing stock is valued at 2,05,846, whereas here it is 1,50,000. So there's a difference in the valuation of my closing stock. Now closing stock more means profit more. So here my closing stock is more. This is my cost records and financial records. Cost records, the closing stock is more. That means profit is more. I have to go from here to here, so I will deduct. So less closing stock overvalued in cost records. That would be, the value that is here is 2,05,846. That is 2,05,846 mine, and here it is 1,50,000. So 1,50,000 minus 2,05,846, that is 1,50,000 minus 2,04,846. 2,05,846. So everything is done. What we get is our profit as per financial P&L or financial records. Let us see, that is equal to 30,200. That means we have not recorded something. Selling expenses. Selling expenses here it is 2,50,000, whereas here it is 5 lakh. So 2,50,000 more selling expenses have been recorded in our cost book. So we need to write that as well. Now again, this is over absorption. So add the over absorption of selling expenses. That is 5 lakh minus 2,50,000. So that is equal to 2,50,000, 2,19,800. That is our profit as per trading P&L. So this is our reconciliation statement. Done with this question, let us go ahead to the next question, that is 4B. Now let us see what is written here. During the financial year 2019-20, GP Limited has produced 30,000 units operating at 50% capacity level. The cost structure at 50% capacity level is as under. So that means 30,000 units are equivalent to 50%. So 100% total capacity, that is 100% is equal to 30,000 divided by 50%, that is equal to 60,000 units. They've given us the cost at 50%. The company, okay, in that also if you see there are certain fixed expenses and variable. The company anticipates that in FY 2021 the variable costs will go up by 10% and fixed cost will go up by 15%. Excuse me. The selling price per unit will remain unchanged at rupees 400. Calculate the budgeted profit for FY 19-20, that means this, and prepare an expense budget on marginal cost basis for the financial year 2021 for the company at 50% and 60% level of activity and find out the profits at the respective level. So let us do one thing. Let us prepare everything in one table so that our work becomes easier. Let us see, let us give 2 minutes to preparation of account. So we are going to have particulars, then we are going to have a column for FY 2019-20. In that we are going to have 2 columns, per unit and the total column. Okay. Then similarly for FY 2021 we are going to have 3 columns, that is per unit, then at 50% level and at 60% level. If we are able to finish this table, I think all our requirements would be fulfilled. Let us start. Okay, let us begin. First we'll start with our sales, since we need to find the profit. So A, sales. Sales per unit is given as 400 and they say that it remains unchanged. 400. Before that, let us first find out the number of units. It would be easier for us if we write the number of units here. Now, FY 19-20 is working at a capacity of 50%, that is 30,000. Similarly, if FY 2020 50%, if it works at 50%, it would be same, that is 30,000, and at 60% it would be this into 0.6, 36,000. Now, if the sale is per unit cost is rupees 400, it would be this into 400, and this would be this into 400 and this into number of units into 400. This is our sales. Okay, now C, we are going to talk about variable cost. Now variable cost, direct material is again a variable cost. So direct material 150, they are saying that material will go up by 10%. So this would be this into 10% into 110%, 165, and this would be number of units into 150, and here also number of units into 165, and here also number of units into 165. This is our direct material cost. Next is direct wages. Direct wages is 50 rupees per unit. So same 50 into 30,000, and it will go up by 10%. So that would be 55. Similarly, we are doing for FY 20 and 21, number of units into the per unit cost. Next is variable overhead, completely variable. Here they have given 50 rupees, same. Here also same, it goes up. Next is direct expenses. Direct expenses are also our variable cost, that is given to us as 30. So again the same thing for direct expenses. Next is factory expenses. Factory expenses 25% is fixed, so that means 75% of 40 is variable. 40 into 75%, that means 30 is variable. It will increase in this manner. Coming to selling and admin, selling and distribution overheads expenses, that would be 80% variable, so 20 into 80%, that is 16 rupees. Auto calculated, number of units increases by 10% and with the number of units. Office and admin, they are saying it is 100% fixed. So what I get is the total variable cost. Our total variable cost would be this and this. This is our total variable cost and this is our sales. So if I minus our variable cost with our sales, what we get is the contribution, that is sales minus our variable cost. Let's go ahead. We have got our contribution. Next would be fixed cost. Now under fixed cost, first is our factory expenses. Factory expenses, we have already written that 30 is variable and 10 rupees was fixed. So 10 into 30,000 is our factory expenses. Now coming to increase, they are saying it will go up by 15%. So into 15% into 115%, and this would be equal to this. Since it's a fixed expense, it does not change with the output. Next is selling and distribution expense. Now selling and distribution, 20 out of which 16 is variable. So 20 minus 16, 4 into 30,000. So 1,20,000 is the fixed part. It will again go up by 15% and the same figure for 60% also. Next is office and admin expenses. That is completely fixed. So 10 into 30,000, 3 lakhs, and the same thing here, it goes up by 15%. So my total fixed cost is equal to this. So what we get is our profit slash loss. So contribution minus our fixed cost would be our profit. Yes. So because of increase in our costs, we are getting a our profit or loss reduces from 15 lakhs to 4 lakh and 6 lakh. So this is our statement of profit or loss at these levels. Okay, so we have solved all the parts in one table itself. Let us give a good name to this table. The name what we can give is statement for calculation of budgeted profit loss for FY 2019-20 and FY 2021. This is our statement. So with this we are done with the fourth part. I hope you have understood everything. If you have any doubts, please do write in the comment section and I will clear your doubts. In the next video we'll be doing the fifth question, and sixth question is a theory, so we are going to do the fifth question only. So next video would be the last video on your mock test papers, and stay tuned because we are going to solve the RTP after that. Thank you.